Hey guys, welcome back to the channel. In this video, I'm going to review Carl from the Moon. I'm going to have a look at a few of his videos and give you my thoughts on his trading style and whether or not he is making suggestions to people that could potentially get them wrecked. So without any further ado, let's get straight into it. The first video here is titled Bitcoin Could Crash to 13,000 Now, and it was posted on the 18th of April. So just in preparation for this video, I'm going to go over to the chart here. I'm going to use the replay feature. We're going to go back to the 18th of April. Just go to the actual yep, there. So including all of that.
Hello and welcome to the Moon. My name is Carl and I'm bringing you this cryptocurrency video, and the Bitcoin price is right now starting to fall to the downside. So I'm going to take a look at the technical support, and I'm going to tell you whether I'm scared or if I'm not scared. So let's dive straight into the chart right now. So I'm going to show you the Bitcoin chart on the 4-hour time frame for the start of this video.
Okay, so we're on the 4-hour time frame. Let's see if I can just enlarge that. Price is on 39,007. So let's just go over to my chart. I'm going to put that on the 4-hour time frame. He is obviously back a little bit. Okay, so 39,007. So we're in the exact same place as Carl. Let's just zoom out a bit and make my chart look like Carl's does. Okay, so that looks about the same.
That Bitcoin broke this support line here, and obviously this is time to pay attention, because if this bigger bear flag here breaks down, then we could potentially see this.
Okay, so I'm just going to draw what he has on his chart there. I would actually use the parallel channel tool here, and mine would look something like this. I think that's pretty similar to what he's got. In fact, I think he's actually a little bit lower. He's in here like that, and that's neither is wrong, it's just different style. So I'll draw it something like that.
Scenario play out, which is obviously maybe not the most bullish of scenarios that we can see here. So this is time to pay attention. Now, if this is a bear flag, then this could potentially be calculated as follows. Let me show you. So we take the pole and we move it down, and I'll show you exactly how. Here you see, we take the pole and then you pull it down like so, and yeah, this.
Okay, so I'm just going to pause it there. What he's doing there is called a measured move, and he's actually doing it generally correct, except that he's a little bit high here. So if you can see, the swing high is about here, and he's just a little bit higher than that. I'd say he's $1,000 or $2,000 higher than that. So that's going to affect where his target is. Let's just have a look.
This would give us a target of $13,000.
So he's actually about 13,400 there if you have a look closely. And if I was to take the trend tool, and I'll use the magnet, that's how I usually do it, and we'll try and get an exact point there, and that'll get us to the exact bottom. So the measured move is going to go from there, and then we're going to go to the very top of that swing high. We're going to try and get it as accurate as possible, and that looks pretty good. And then we have our target down here. Just draw that in with the horizontal ray. Target there, I've got 12,000. So he's about 1,400 different, and I'd say his target is, for lack of a better word, wrong.
But guys, no, I don't think that's going to happen. I'm just showing you how you would technically calculate the bear flag. So I'm just showing you technicals, but I don't think this is going to play out, because this would be just absolutely, this would just be insane. This would.
Okay, so I'm just going to pause it there. He is technically correct. His target is just a little bit out, but that's not a big deal. What he's saying there is that even though this is technically the target, he doesn't think it's going to hit that, because that would be crazy. And I'd have to agree that it would be crazy, but that's not a reason that it can't hit it. It definitely would be very painful if Bitcoin was to reach $12,000, $13,000, but it's definitely not out of the question, and that is what the chart is saying. The other thing we have to consider is that the Fed is raising interest rates, the Fed is unwinding its balance sheet, and these things are bad for Bitcoin, which is why everything's been going down. So he's right that this is a bear flag. He's right that that is technically the target, or he's pretty close to the target, but I don't agree that this just can't happen because it's crazy. That's not a reason that this can't happen if you're a trader.
Insane. I'm not saying it's impossible. I'm just saying that I believe that Bitcoin is very likely to hold above $30,000 for the next 2 months here. If we do break 30,000, then of course we have to pay attention to that $13,000 target. But so essentially, as long as we hold above 30K, I'm still remaining bullish, because This is
Okay, so Carl's still remaining bullish. Carl is obviously a massive bull, and I think he's letting his bias creep in here. The analysis, to me, it's quite clear. We're having a massive move to the downside, and we're in a correction. This is a typical looking ABC correction. I probably wouldn't look at it on this time frame. Let's jump up to, I think it would look a bit better on the weekly. Yep, so if we look at this on the weekly time frame, that is a classic ABC correction. We've got an impulsive move down, so impulsive basically moves a steep move, and then we've got a shallower correction, so the trend usually goes in the direction of where the impulse moves are happening. So the impulsive moves down, and then we've got a corrective move, which is shallower, and it's in the shape of an ABC correction. So if we come down to the lowest point here, I'll just get rid of the magnet, and we go A, B, C, if you're into Elliott wave theory. Otherwise, you just call it a bear flag. So it's either bear flag or Elliott wave ABC correction, depending on how you look at it. And then we would definitely expect this to continue to the downside. So that's what I think the analysis should be. If you disagree, by all means, tell me what you think in the comments. Let's just go back and see what else Carl has to say.
means that we still have this trajectory of higher lows and higher highs. And actually, if you scroll back into the Bitcoin history, then you'll see that whenever Bitcoin creates these upwards trading channels, they do actually tend to break to the upside. That is just a... So...
Oops. Okay. So let me just go back. Well, no, we'll stay on the weekly. What he is saying is that these upwards channels tend to break to the upside. And I think if we were to sort of draw this in, his channel looks sort of something like this. We've got a bit of an upwards channel. And I think what he's alluding to is that sometimes corrections aren't always retracements. So this here is a retracement in a bear market. It's going to the upside. If this was a bull market, then we might expect a retracement to do this and then continue to the upside. But sometimes the market is so bullish that the correction actually goes up as well and then it continues to the upside. But what we're seeing on the chart has to be viewed in the context of what's actually happening in the wider market. And like I said before, the Fed is raising interest rates, it's unwinding its balance sheet. These two things, they remove money from the money supply. So it's the opposite of inflation. It's bad for high risk assets, and Bitcoin is one of the highest risk assets. So things aren't good, and he should have a bias to the downside for sure.
That's a fact. But we need to hold the support, of course. That's very, very important. Let me also, I want to talk about other things as well. Maybe we should talk about like Ethereum, maybe. I know that maybe will.
Okay, so he's moving on now. I guess he's finished with his Bitcoin analysis and he's going to go on to Ethereum. So I can't say that I agree with Carl's analysis on Bitcoin there. Of course, it's really easy for me to come in after the fact, after we already know that it ended up breaking down. Anybody that is in my Discord knows that we called that as a bear flag and we definitely expected it to continue to the downside. If you're not a member, then trials are free, guys. 7-day free trial. The details are in the description box below. You can always go back through the history of my updates on Bitcoin and you'll see that we did call that as a bear flag and expect it to break to the downside. Okay, so I'm on the second video that I'm going to review here. I've obviously already raced ahead a little bit to prepare for the video. This is the last video they're going to be reviewing and you'll see why. I think I've seen enough, so let's just get into it.
I would say that the target is right here because that's the top of the wedge, and essentially the target out of the falling wedge is the top of the wedge.
So looking at a falling wedge here, it is a pretty obvious falling wedge, and Carl is 100% correct in targeting the top of the wedge. That is the typical way to target a falling wedge, and let's just see what else he's got to say.
So the target should be approximately 45.7k. So this could be a trade of approximately 8%. So if you want to make a quick trade and make some quick money, then if you put in a trade here, when it will break out, that's 8% move, but with 10x leverage over on Bybit, that's 80%. So if you put in $100,000, you will make $80,000 on that move, which is of course incredible. It's a small move, but with some leverage trading over Bybit, if you're experienced, you can actually make some money.
Okay, so I'm glad that Carl at least said that this is for experienced traders only, but a lot of people are going to go ahead and trade this anyway because Carl's just hyped everybody up, telling you that you can make a lot of money by using 10x leverage and taking a breakout trade on this falling wedge. So he hasn't really established any conditions of entering the trade. He's basically just said if it breaks out here, go long. He hasn't said where to put a stop loss. He hasn't talked about any sort of risk management, which would be making sure that you take a responsible position size so that if it hits your stop loss, you know exactly how much you're going to lose. In this case, Carl hasn't even suggested a stop loss. So the only possible scenario if price goes down is that you're either at the computer when that happens and you can stop your trade, or you end up getting liquidated. So let's just carry on and see what else Carl has to say.
That's how I can make money from a small move without putting in a lot of money, basically. So that's my quick little analysis for today, guys. That was a nice little trade alert. Hey guys, look at this.
Okay, so Carl's finished with his analysis there and his advice to get long with 10x leverage. If you feel that I'm taking Carl out of context, you're welcome to go back and have a look at the video. So let's say that you were to take a trade as it broke out, as Carl suggested, you were to target the top, which is way up here, and you wouldn't have a stop loss if you took Carl's advice, because he never said anything about placing a stop loss. And to a lot of you it might seem obvious to take a stop loss, but as someone who teaches people how to trade, unfortunately it's definitely not obvious to new traders that you need to have a stop loss. So anyway, you probably would have put your stop loss around here somewhere if you knew what you were doing, or you might have left it a little bit wider. Either way, let's just have a look and see what happened. So if you kept your stop tight, you've already been stopped out. If you're a little bit looser, you may still be in this trade. At this point, you're running at a loss. The trade is going quite well at this point. If it was me, I would have advised to take some profits here. So you've got this first touch here, this swing high, I would have had one profit take there. At this point, assuming you had two profit takes, so you would have had one here and one at the next touch, another one up here. At this point, you've taken 50% of your profit here. I'd say you'd be 100% risk-free, and even if you come back and get stopped out down here, you're in a little bit of profit. But as we can actually see there, even if I kept my stop wide, I actually would have gotten stopped out right there. And that's fine if you had a stop loss, but Carl didn't advise to take a stop loss, so let's just have a look and see what would have happened to you had you taken Carl's advice. You don't have any targets apart from the highest one, and you've got no stop loss. I'm just going to pause that here. I'm going to get the time frame onto the 4 hours so that we just get a better picture of what's happening here. So without a doubt, if you took Carl's advice on this, you would have blown up your account. So obviously Carl didn't give good advice in this particular video here. I'm not going to say that Carl's a bad trader or a bad guy, maybe a little bit careless. If you are a fan of Carl and the moon, let me know what you think in the comments. If you found the video informative and helpful, then please like and subscribe. Otherwise, I'll see you in the next one. Cheers, guys.